You guys may be aware that I'm a bull for Zillow stock and I actually own a piece of it in my portfolio. But there are people making a credible argument right now to short that stock. And that's what we're going to talk about in this video. So guys, smash that like button, subscribe if you're new, and of course, drop a meow in that chat. You're watching More Money. Let's get it. What's up, guys, and let's get right into this. You know, I absolutely love looking into stock research that goes against what my conclusion is, because that's really the only way to understand if what I'm doing and thinking is correct. And why is it that there's so many people right now suggesting that it's time to short Zillow stock despite it being down so much? And the question I'd want to start with is, how much has it been down? Well, you can see that in the past year, Zillow stock is down 65% due to two things. One, the closure of the home buying business. That's that huge dip you see in November of 2021. And then the second issue, and the reason why the stock price is down even further, is the slowdown of the home buying business. Now, I only recently started buying Zillow around May or June, and I've been doing it using cash secured puts, so there is some downside protection, but who is actually saying that we should be shorting the stock in this environment? Well, it's not just one or two Joe and blows off the internet. This was an article printed on the Wall Street Journal. So you can see here in their market section, they said shorting Zillow is your best bet in housing this year. But why exactly is the Wall Street Journal suggesting that you short a stock? That's a very aggressive position for a publication like the Wall Street Journal. Well, you can see that they're saying or suggesting that more pain is likely coming. In July, sales of new single-family homes fell nearly 30%. And now even Zillow is saying that it expects transactions to meaningfully contract as inventory rises this year. And Zillow, in an effort to sort of retain their employees, are diluting the stock just to keep them using stock-based compensation. So ultimately, they're expecting a 2% dilution to the shares over the next few years in an attempt to make sure that they keep top talent and they don't flee to sort of other competition because of lower compensation. But it can't just be a short-term slowdown and the fact that they're diluting the stock, which is causing Wall Street Journal to suggest that this could potentially be a good short opportunity. Listen to what their CFO himself has said. Chief Financial Officer Alan Parker said on the second quarter call that in a quickly declining macroeconomic environment, agent ad spending tends to slow down as buyer demand wanes. And so in other words, Zillow's agents don't pay for idle eyeballs, they pay for motivated leads. And so effectively, essentially what he's saying is that Zillow, after canceling their iBuying business, they've gone back to becoming a platform. Well, the platform makes money off of ad spend, and one of the major customers for their ad spend is real estate agents. And real estate agents are not going to be placing ads if the market is drying up. So effectively, you have a dead business model in this current environment, at least in the short term. But with all this in the article, and go look up the article and read it for yourself, I am not convinced. I am still a buyer of Zillow in this market, and here's a couple of reasons why. The first one is I love the fact that they created a partnership with Opendoor, which is a iBuying business, because they have stayed true to their roots, which is being a platform. And so they've entered into a multi-year partnership to allow home sellers on the Zillow platform request Opendoor's offer to sell their home. And so effectively what they're doing with this partnership is they're capturing revenue that would have already been on the table, because people in many cases would list their homes first with Zillow, but they might just want to get out of it quickly if their home is not selling. And so why not just offer it to a home buyer or an iBuyer like Opendoor if you can get away with the whole fuss of selling your home and just take 5% less of the offer price that you would have already offered. And in this environment where homes are selling at a much slower pace, that might be a better option depending on the price that Opendoor gives you. The second reason why I'm a big bull on Zillow is because of the longer term picture. Zillow is still the #1 residential real estate app by a wide margin. They are 3 times larger than their nearest competitor, and that moat is growing. Now, their partnership that brings them back to their true form and the fact that they still have a strong moat are two really good reasons why I like Zillow. But that's not the only reason. I do believe that what we're experiencing right now are short-term to medium-term pains, and over the long term, I still think Zillow wins, and here's why. I believe, just like how Zillow believes, housing is a growth industry, albeit it's cyclical, but it has strong secular tailwinds right now. And so what exactly are those tailwinds? Well, I've talked on this channel quite a bit about the fact that the US has underbuilt their home infrastructure by about 5 million homes. And so over the next 10 years, you're going to have to build these homes. You may not necessarily build them in locations that are more expensive, like the Northeast, but you're seeing huge swaths of home building happen in the South. So Florida, Texas, Ohio even. And of course, Ohio's not in the South. And another area that's not in the South that has experienced a huge boom, it's Pittsburgh as well. And who's buying all these homes? Well, it's all millennials now because they're emerging as home buyers. They're getting to that point in their lives where they've formed families or starting to form families. Their situations require them to be in homes, and that's the direction that they're moving. Now, I know a lot of you guys will say that, look, housing affordability is at its all-time lows. And yes, you're right. That's one thing that's going to be stopping them in this current environment. But I do believe that as home prices continue to decline, housing affordability will get better based simply on the fact that those lower home prices will give them lower mortgages. So that's why I'm a bull on Zillow. But what does Zillow think about their business going into the end of 2022? I think it's very important for them because at the end of the day, you could be a long-term bull on a company, but if it goes out of business in the short term, then your long-term thesis is out of the window. So what does Zillow think about their business as a whole? So what management is saying is that despite the challenges of the macroeconomic environment, they're making strides in their key growth areas. But the only growth area that I want to see is how are they building out that super app. And so you can see that they're including their financing, touring, and seller solutions that gets them closer to their vision of an integrated digital experience to help consumers with all their real estate needs in their housing super app. And that also includes their deal with Open Door. So you can see that they're executing on their strategy and they're developing a wider and wider moat. They're throwing more crocodiles into this moat, and that's what I like to see for a company like Zillow. So that's why I'm still a buyer. Now, it's going to be a tough go, and I actually might be a little bit optimistic. You guys let me know in the comments. And what do I mean about I might actually be optimistic? Well, you can see how I'm valuing the company. Notice that I do believe that the revenues from the IMT and the mortgage segments are going to decline by about 35% in fiscal year 2022. Notice that the total revenue is actually down by 60%. And the reason for that, they're going to get higher revenues than what I'm forecasting for fiscal year 2022. But I arrive at a lower revenue because I've pulled the iBuying out of my model. So that iBuying segment, the home segment. So they'll probably report maybe like 6 billion in revenues. But the reason why I removed iBuying is because just an in and an out from my perspective. I want to value the company stripping out that segment completely. I want to value it forecasted based on what the future cash that this business can generate from the segments that they're presently operating. And notice that in fiscal year 2023 to 2025, I expect a staggered recovery. So in 2023, I expect a big recovery, and then it slows down in 2024 and slows down even further in 2025. And then down in 2027, it starts going back to a slower growth trajectory. Now, here's where you guys can actually debate with me. Is a 35% recovery in 2023 too high? Should we be valuing this a little bit lower in terms of revenue growth or revenue recovery in those subsequent years? I want to know what you guys think, so let me know in the comments. Now, where does my valuation stand for Zillow? Is this still a cheap opportunity? Well, before I get into that, guys, remember that approximately 80% of the watch time on this channel is from people that are not subscribed. So please subscribe to the channel to not miss out on great content. And this is what the valuation is suggesting that Zillow is worth. I still believe that this is a $60 stock that's currently trading at $33 per share. So its share price to its intrinsic value is approximately 50%. But I'm using a terminal earnings multiple of 25 times earnings. So you guys let me know if that's a high multiple or a low multiple. Now, I did show you that Zillow model, but the question is, how do you get access to that model to see how I built this whole thing out in the most granular method? Well, you can get access to that at the lower tier of the Patreon. And if you want to join us for an epic live presentation every month, join us at that upper tier of the Patreon. Now, here's the thing. If you're going to invest in real estate stocks, you got to understand what sort of this economic hurricane is that we're dealing with right now, or potential economic hurricane on the horizon. Well, don't listen to me talk about it. Listen to Jamie Dimon speak about it. And I actually did a video discussing Jamie Dimon's words in this video right here.